Are you considering buying a house in Canada? It's crucial to understand the current housing climate before making such a significant investment. The Canadian housing market is currently experiencing a crisis, with house prices expected to fall by a staggering 17.5% from their peak. This is double the fall we saw during the financial crisis of 2008-09. There are several factors contributing to this crisis, including a rapid increase in interest rates and a surge in prices during the pandemic. Additionally, the debt-to-net disposable income ratio of Canadian households is alarmingly high, making them more susceptible to these higher rates. With housing becoming increasingly unaffordable for many, the forecast for a peak-to-trough correction in house prices ranges from 10 to 30%. Given these circumstances, it's essential to consider whether now is the right time to buy, or if it's better to wait. One of the main factors influencing the housing market is the interest rate. So, what's the current status? Well, the interest rate plays a pivotal role in determining the affordability of housing. It's a bit like a seesaw. As interest rates rise, the cost of borrowing increases, making it more expensive for individuals to buy homes. This in turn can lead to a decrease in the demand for houses and potentially a drop in house prices. Currently, there's a forecast of a peak-to-trough correction in house prices ranging from 10 to 30%. This correction is largely due to the rapid increase in interest rates and a surge in prices during the pandemic. These factors have made housing unaffordable for many, increasing the vulnerability of households. The debt-to-net disposable income ratio of Canadian households is high, making them more exposed to the impact of higher rates. For instance, consider a scenario where interest rates rise by 1 percentage point. This could significantly increase the cost of a mortgage, making it harder for households to manage their finances and potentially leading to a decrease in home buying. With higher rates, the affordability of housing becomes a pressing issue. Therefore, prospective buyers need to consider this factor carefully. Now that we've discussed the current situation, let's consider the future of the Canadian housing market. Analysts predict a 10% decrease in average house prices next year. From the peak, there's an expected tumble of about 17.5%, which is double the fall witnessed during the 2008-09 financial crisis. However, these predictions don't spell doom and gloom. In fact, by 2024, we can anticipate a modest increase of approximately 1.3% in house prices. Despite these figures, the risk of a housing price crash is considered low. The market is undergoing a transition, shifting from a seller's market characterized by high prices and low supply, to a buyer's market with more options and potentially lower prices. This transition, however, doesn't necessarily mean housing will suddenly become more affordable. Analysts estimate that house prices need to fall about 25% from their peak to reach affordability. While the market is changing, the question remains, is it the right time to buy, or is it better to wait? So, should you buy a house now or wait? The answer isn't simple. It's a question that's been on the minds of many Canadians, as the housing crisis continues to unfold. We've discussed the current state of the housing market, the impact of rising interest rates, and what analysts are predicting for the future. Remember, Canadian house prices are expected to fall by a significant 17.5% from their peak. While some see this as a golden opportunity, others are wary of the high debt-to-net disposable income ratio of Canadian households. This makes them more susceptible to the effects of higher rates. Future predictions suggest a decrease in house prices ranging from 10 to 30%. However, this correction might not necessarily translate into more affordable housing, as the predicted declines are only about a third of the gains seen since the start of the pandemic. The decision to buy or wait is a complex one, dependent on your individual circumstances. It's crucial to weigh these factors against your financial stability, your ability to handle potential increases in interest rates, and your long-term plans. In this uncertain housing climate, it's crucial to stay informed and make a decision that best suits your situation. Remember, buying a house is a significant investment, and it's essential to make a well-informed decision.